reasons why people decide to invest their money is to achieve financial freedom. But most people don't know where to start in order to actually get there. Now, the truth is that some investments can actually bring you to your goal of financial freedom much faster than other investments. And some investments can virtually guarantee that you become financially free. In this video, I'm going to share the top 5 investments that you can make today in order to fast track your life toward financial freedom. So make sure that you listen up to this video and listen the entire way if you want to know exactly which investments to make today in order to achieve financial freedom. The very first investment is real estate. One of the reasons why I say real estate is the #1 investment here in this list. It's because 90% of millionaires worldwide have built their wealth in part due to real estate. So if you want to be the best, why not follow what the best already did? Now, why is real estate so lucrative for millionaires? #1 is passive income. In fact, real estate properties can be like a cash cow for you. And #2 is appreciation. So real estate over the last 20 to 30 years have appreciated massively in value. So if you invest today in real estate and hold on to it for 20, 30, even 40 years from now, imagine how much that house could be worth down the road. If you invest in a real estate property and then you rent it out to people that want a roof over their head, you make money from that, right? In the form of rental income. If you do it right, real estate can actually be a fantastic way to reduce your tax liability. And here's how. First, you want to create a business entity that owns your rental real estate. For example, you might want to consider holding your real estate in an LLC. An LLC is a limited liability company that essentially protects you from any liability. Now, I'm not an attorney and I'm not going to go into the rabbit hole here, but if you have an LLC business structure too, you, my friends, can also get tax deductions for that. What I mean by that is, let's say you make $10,000 of annual rental income from your real estate. You can actually deduct maintenance, repairs. You can even deduct the interest from the mortgage. And if you have a property manager that actually manages your tenant, you can even deduct the cost of that property manager. The other reason why I think real estate is one of the best ways to invest is it's a hedge, or it's a protection against volatility. Now, as you know, the markets, they go up and down and up and down, and there's no way of denying that, right? Real estate, on the other hand, yes, it definitely goes through cycles as well, but they don't go through as many ups and downs as the stock market. If you're someone who needs a little bit more stability in your investments, real estate, my friend, is your best bet. Now, how do you actually invest in real estate? #1, you essentially buy the house itself or buy a duplex or whatever it is. I started becoming a landlord when I was 22 years old. I started renting out rooms in my home in order to generate a little bit of extra cash. My goal was to generate between 5% to 8% of cash flow of the purchase price of my property. So let's say I purchased my house for $200,000. 5% of $200,000 is $10,000 per year. So that means if I want to generate a positive cash flow, I'm looking for a net profit of $10,000 per year from that $200,000 property. Now, the other thing is most people don't actually have the cash to put down in order to buy real estate. Have no fear, there is another way, and that is called Arrived Homes. Arrived Homes is an investment platform where you can literally invest in single-family homes for as little as $100. You invest in a house along with many other investors, and then you collect a very small percent of the actual rental income. You can start building your rental income portfolio that way first until you have enough money saved up to put a down payment on an actual property. All right, my friends, we talked a lot about real estate, but let's jump into the next asset that could help you achieve financial freedom and literally fast track you right there, and that's the stock market. The reason why is because of growth. You, my friends, can literally grow your net worth and your assets astronomically if you invest in the stock market, especially the earlier the better. And the stock market returns can actually beat inflation. Now, if you're someone who doesn't exactly like to invest in pretty risky companies, the stock market could be a great place to start. There's less risk of you losing your money because the company has already been established and it's on the stock market. As you know, the stock market has very high growth potential. When you start investing, you might not really see a difference in your investment account. But if you stay invested and keep investing over time, that amount could triple, quadruple, if not more. So for example, if you had a $10,000 investment that compounds at 5% every single year, at the end of the first year, that investment would have generated $500. If you stay invested and don't even put more money into this investment, after 20 years, you would end up with $26,533 because of that 5% per year compound. That's actually a pretty conservative estimate because over the last 20 years, the stock market has actually returned over 9%. Now, how do you actually invest in the stock market? You can virtually use any type of investment platform out there. For example, there's Vanguard, there's Charles Schwab, and there's Fidelity. The second step is figuring out what type of account you want to open. There's one called a qualified account, and there's one called a non-qualified account. Qualified accounts, those are retirement accounts, and they come with a lot of tax advantages. And the non-qualified account essentially makes you pay taxes in the year of a sale, in the year that you receive dividends, or in the year that you receive interest payments. Once you know what type of account you want to open, then I would suggest you check out the platform Seeking Alpha. And they essentially give you the top insights from chartered financial analysts, from Wall Street wizards, and the list goes on and on. It even gives you tips and insights from algorithms that actually work. If you want to do research, I would suggest that platform. If you want to invest passively, then maybe consider an S&P 500 index fund. Remember, when the stock market goes down, that means there's an opportunity for you to invest even more money. All right, my friends, let's go into the third investment, which is investing in small businesses. Why would I suggest you invest in small businesses? There are two reasons. Number one is cash flow, and number two is massive growth potential. Let's say that you invested as an early stage investor in a company for $100. And let's say that $100 gave you a 1% share in that company. But that company grew bigger and bigger and bigger over time to the point where the company's value was actually $1 billion. Your 1%, my friend, is worth $10 million. And the reason why you can make so much money is because of a concept called equity. Equity means you own a piece of a company. So how do you actually invest in small businesses? Well, there are several ways. The first way is simply in the stock market. You can invest in ownership of a company, but chances are you're probably only getting a very, very, very small percent of ownership. The second way that you could invest is through platforms, specifically crowdfunding platforms that are targeted directly to startups. Examples of startup crowdfunding platforms include Our Crowd, Seed Invest, Start Engine Crowdfunding, and Seeders. You could even hire a venture capital firm. VC firms are essentially companies that take investors' money, have a team working in the background and figuring out where to put their investors' money and in which startup that money should go for the highest return on investment. To invest in a VC firm, you probably need to start with several $100,000 or a couple $1 million. So if you have the money and you hate doing research, a VC firm might be good for you. All right, my friends, let's talk about the fourth type of investment, and that is alternative investments. Alternative investments are essentially any type of non-traditional investment. Think about artwork, farmland, gold. Our traditional investments, on the other hand, are typically stocks, cash, and bonds, right? As you know, the saying, don't put all your eggs in one basket, I think that holds true to investing as well. A traditional 60-40 portfolio had an average volatility percentage of 9.4%. A team of investment professionals thought thought, what if I add 20% of alternative assets into this traditional portfolio? And by adding alternative investments into this traditional portfolio, the volatility went down from 9.4% to 9%, and the returns went up from 8.5% to 10.6%. One example is farmland. Farmland doesn't really go as up and down as the stock market. And think about it, people need food. You can typically achieve an extra income stream through farmland when you share a percentage of the profits from the farmer. If you don't actually want to buy a farm on your own dime, there are actually platforms out there that help you buy only a portion of a farm while pooling your money with other investors. Those platforms are called Farm Together or even Acre Trader. Another reason why alternatives work is because they are hedges or protections against inflation. What investment can actually combat inflation? And that answer could be artwork. There are platforms out there like MASTERWORKS, for example, where you can buy a small share of a massive artwork, which have appreciated 39%, 50% or more over the last several years. I just want to put a little disclaimer here because alternative assets, they're not always liquid. So if you need your money tomorrow from an artwork investment, for example, you probably have to wait several years to get that money back. And finally, my friends, let's talk about the very last, the fifth investment here, and that is yourself. People can take away everything you have, but my friends, they can never take away your knowledge. There are many different ways that you can invest in yourself. You can, number one, buy courses. There are platforms like Udemy or Coursera where you can literally get a full MBA program for like $100. The other thing you can do is, for example, buy books. You can even go to blogs. You can go to YouTube, which is what you're doing right now. And do you want to know a secret? The best shortcut to life, in my opinion, is finding a mentor. A mentor is one way where you can literally skip over years of experience because your mentor can tell you what they learned of years of trying within just a couple of hours of conversation. If you make $100,000 a year, you should be investing between $5,000 and $10,000 into yourself. You gain invaluable skills, which means you become more valuable, which means you ultimately make more money, whether it is becoming an employee at a different employer or you build your own business. The honest truth is that achieving financial freedom isn't just done by investing. If you want to know the exact roadmap to achieving financial freedom, make sure you click right here where I tell you step by step what you can do today to achieve financial freedom